If you are planning on trading stocks or strictly curious how to read those confusing looking charts, understanding what a candlestick chart is an absolute must. You may have seen charts that are littered with indicators and look extremely confusing. However, these are not necessary to understand the basic price action of a particular stock. Though those other indicators can be a guide when entering a trade, many professional traders use naked charts, which strictly represent the price of a stock at any given point of time, without any other information. I will reiterate, a candlestick represents a period of time. This can be seconds, minutes, weeks, months, and even years. A fully formed candle represents a brief period of time depending on your chart settings. As you can see here, please note how the candles change, even though we're only looking at 1 day's worth of price action. The day is in the gray box. For instance, on the minute chart, there's going to be 390 different candles because there's 390 minutes in a trading day. However, in the hourly chart, there's only going to be approximately 6 candles because there's only 6.5 hours in a trading day. There are a few basic parts that make up a candlestick. These parts indicate exactly what happened to the price over that time frame. However, before we get into that, you need to understand there are bullish candles and bearish candles. Bullish candles represent when price has increased over a specific period of time, and bearish candles represent the price decreasing over a specific period of time. If you refer to the green bullish candle on the left, you can see that this is the opening price and here is the closing price. Notice that on the bullish candle, the closing price is higher than the opening price. Inversely, on the bearish candle to the right, the closing price is going to be lower than the opening price. The difference between the opening and closing price is known as the body of the candle. In addition, if you see lines that form on the upper and lower sides of the body, these are known as wicks or tails. This represents the highest and lowest price over this period of time. There are many specific names for candlestick patterns when price reacts in a specific way. We won't get into all of them now, however, there's a common candlestick that looks like this. When price opens and closes at a near identical price, it forms a candle known as a doji candle. Once again, these doji candles form when the opening price is nearly the same as the closing price. This can indicate a number of things that we won't get into right now. However, these candle patterns can indicate potential price movement to either the upside or the downside. Let's watch this in real time to get a better understanding of how charts form. To conclude, we are going to analyze this chart and highlight bullish candles, bearish candles, and doji candles. This is a chart of the S&P 500 index. So first we're going to find some bullish candles. And remember, a bullish candle is where the price closes higher than what it opened at. So these are marked on the green candles on this chart. So right here you can see that this candle would be considered a bullish candle. It opened here and it closed here. And here again, we have another bullish candle. All the green candles would be considered bullish. Now on the inverse, if we look here, this is a very distinct candle. We have the opening price here, and then the price dropped and it closed here. Here's another very distinct bearish candle. And another. And finally, we're going to look at doji candles. It is much more common to have bullish and bearish candles than a doji candle. That is because typically there is going to be price action at a given specific time when the market is open. However, when you do get a very close open and close of a candle, they do form. There's one there, we have one here, we have another one here. This is close to a doji here as well. I hope this tutorial helped you. Please like and subscribe this video, and we'll see you next time.